Well, thanks so much for tuning in to Talking Point. I'm your host, Neeraj Shah. The Talking Point today is as much the company that we have and the management of which is joining us as is the space that they operate in. Root Mobile is, in a manner of speaking, a recent listing, not more than 12 months old, so to say, or maybe slightly more here and there. But the CPaaS space has become very famous in India by virtue of Root Mobile. The question to the management as they join us today is that after having shown the 45 to 50% growth in FY21, which is a COVID disrupted year, or FY20, what is it that they believe is in store for the next, not just 1 year, but the next few years? What's the trajectory that they can clock in? What are the kind of return ratios that they can exhibit? And what is it that they need to do to stay on top of the pecking order? Rajdip Gupta, he needs an introduction. He's with us almost every quarter, and really great to have him today. Rajdip, welcome. Thanks for joining in today. And alongside Rajdip, we have, if I can say, the newest addition to the Root family, John Owen. John, great having you, and I hope all is safe wherever you are.
It is. Thank you very much.
Great having you. Rajdip, before we get down to the nuts and bolts of what could happen ahead, just a brief mention about how Q4 went by as well. Not that your business gets too impacted by COVID, but there were a lot of other variables which were to be watched out in Q4. Would you lay it out how Q4 was according to you, and FY21 or FY20? How did the year turn out?
Thanks, Neeraj. Thanks for having me here. And I think just to start with, I would like to cover how exactly FY21 went for Root Mobile. In terms of revenue, I think we achieved 1,422 crore revenue. We did EBITDA of 175 crore and with a PAT of about 132 crore. And I think that is what the growth we have shown. I think if you talk about the year-on-year growth, it's 47% year-on-year growth as compared to the last year. And if you talk about the EBITDA growth, it's about 76% year-on-year growth. So in terms of overall growth trajectory, I think we have done phenomenally well. And whatever the guidance we have given to our stakeholder or investor during our IPO in September, I think we have overachieved. And in terms of Q4, I think if you see our overall revenue, there was a little bit decline, but I think overall gross margin, if you see, it has grown big way. The little bit decline of revenue probably has a reason of DLT implementation in India, which caused lots of chaos in the market, and that has led overall impact on our volume growth. At the same time, I think COVID also impacted some of the Latin America, countries like Brazil, where we have seen a degrowth in the volume. So it was I think overall, if you see, Q4 has a very good in terms of gross margin, and we were little bit down in terms of revenue. But as an overall yearly performance, if you see, I think we have done phenomenally well.
So Rajdip, you're saying that customers are now in sync with this whole mechanism. What else? Because when I look at, can you just some more color about the internal operations of Q4 and of course the customer acquisition strategy as well? Because I'm very interested, Rajdip. Last time around when we spoke, you were on the verge of bagging a very large deal. The deal was to be fructified in 2 or 3 weeks. Correct me if I'm wrong, but I haven't seen any announcement to that effect as well. So talk a bit more about Q4 and then talk about the deal wins as well.
So Neeraj, if you see overall performance of Root Mobile, like H2 is always better than H1. And Q3 is always better than all the 4 quarters. So it's more about because of the seasonality, because in Q3 we have Diwali, we have Christmas, so all this transactional activity happens a lot. So I think if you talk about Q4 performance, we are still, I think, believe that it is on a steady side. It's not much of degrowth over there, but I think because of seasonality, if you see our history in past also, the Q4 is always lower than Q3. And overall, if you see the Root Mobile, H2 is better than H1. Even in this case, I think H2 is better than H1. And you're right. I think the customer which we were talking about, that large customer, we onboarded the customer, and we do see very good traction with that customer now.
Oh, okay, fair call. Now, one more acquisition that you did was John Owen, right? He comes into your team starting Q1, I believe 15th, 16th May is when this happened. John, thanks so much for speaking to us at BloombergQuint. Can you tell us a bit about what you reckon would be the nuts and bolts within the first year of your operations? Because I do see And when you joined in, you mentioned that you need to execute, that you believe that Root needs to execute the plans that will help the company evolve from an Indian success story to a global success story. Tell us a bit about this.
Yeah, and I think, first of all, I think you've got to look at Root Mobile's heritage, its history, and the foundations. And everybody talks about growth, and is that new growth in customers? Is it organic growth of existing customers, or do we go into new territories? But I think we're in a market that has got fantastic tailwinds, generally, because the adoption of digital is everywhere. And we're at the start of that transformation, not at the end of it. So we are in a growth market. I think growth for any company, but particularly a public company, it has to be structured. So we're growing it sustainably. We're growing in the right markets with the right products and the right customers. And that needs a plan. So it's not just repeating the last 3 quarters for the next 4 quarters. And it's about building that sustainability. And as we scale, we need to put more infrastructure into the business. We're going to be selling, our platform will become richer with more products. And that helps our customers go on this omni-channel digital experience with Root Mobile as a consistent partner. So if you look at all those variables, we just need to build a plan and a strategy that's right for Root Mobile, builds on the strengths that we have, and also recognizes that we need to acquire new strengths as we go into new markets, new cultures, new operating models, because the overall business is growing, both in geography, in quantum, in people, and the way you run a bigger organization, particularly a public company, is different to running a more, a younger company, which is more maybe agile. So what we want is the agility, but we want the scale, the predictability, which will obviously yield better profitability in the long run. So that's how you build a business, by having a plan, executing it, reviewing it, adapting it. And that's what, I'm looking forward to working with Rajdeep and the team. And within 2 weeks, there is the capability, there is the vision. We've now got to build that plan and execute it. So, go back to the last question. Consistently, we can give you predictable growth that drives good profitability. So it is that simple, but, it's the plan is in the formation at the moment. But great fundamentals to start with.
Rajdeep, for the last 2 or 3 times that you've spoken, you've mentioned that while you're present in the countries that you're present in, you would want to make a bigger and a more pronounced foray into the high margin geographies as well. Does John solve that part of the puzzle, if you will, for you? How do you envisage what John brings to the table? Because he's had this experience with an Indian IT service vendor in his work life till now. What does it do for a product company like yours?
So I think John's overall experience is going to add lots of value, because John understands the cultural fit, between the Indian company and the international company. So I think John is going to completely focus on a market like Europe, Latin America, and US, and that is his market right now. And we believe that is a market where we see lots of high margin customers, and the potential is very huge. And I think John's responsibility is to make sure those 3 markets get materialized and we get solid visibility in those markets. We already have a visibility, but we want to grow faster, and we want to make sure that we start building higher revenue coming from those markets. And that is the reason the hiring John is a right match for Root Mobile, and whatever vision I had and why we as a company have, is definitely matching with all boxes. You can say that.
John, you want to come in on how does this happen? Because US is not an easy market to crack, and there are players out there who are already present and players with capability as well. So what's the kind of traction that you reckon does FY22 bring in for Root in those markets, particularly US, but the others also that Rajdeep spoke about, that you are quote unquote in charge of?
Yeah, but I think it goes back to the fundamentals of companies are a group of people, and they need a shared vision, they need shared values, and the whole is greater than the sum of the parts. And I think that's why I've joined Root, because I see an organization with a vision and a purpose and a soul. And I respect the people who've built the organization, and I can work with them and complement the skills they've got. To answer your question about how we grow in what we'll call that European and North American market, I think, first of all, we already supply today, we partner with 9 of the top 20 technology companies. A lot of those are coming from the US globally. So we're going to build around them, and we're going to build a stronger relationship with them, because our relationships are going to get more local than maybe based out of India. And you start by exporting your capability, but as you grow, you go from an export business to an international business to a global business. And there's a natural transition. And what we're doing is, under Rajiv's leadership, we're investing in executive management in the region to be closer to the decision makers. And we will continue to upskill that. So those customers who already work with us and understand the value of our platform, our reach, our scalability, they will want to go on a growth journey with us. So we've got to get closer to those customers and grow with them. We've already done the heavy lifting of building credibility with them. What we now need to do is professional account management. So we actually align our plan of record with their plan of record, and we grow together. But it goes back to the fundamentals of the CPaaS market. It's a growth market. Supply chains are being made, broken, challenged. And I think that's really exciting. And that, what we've got to do is have the smart people in front of the customer, helping them fix their business problems, seeing them execute their growth agenda. That's how we'll do it, by being close. But we're a global company, but we also act locally.
Yeah, I think just to add on the same thing, Neeraj, like overall, if you talk about our connectivity is so strong in almost all the emerging market. Like to start with, like you say, US, almost all the OTT players, we still have few OTT players who are not working with us. I think our first target is to just close those accounts. And I think there are quite a few which we are not.
They will be working with others right now, Rajdeep. So
yeah, but they might. So they might be working with others for sure. There might be a US company, but there, if you see all these OTT players, their biggest market is all emerging markets like Africa, Asia, and Middle East. So we are very solid in terms of our connectivity in this part of the world. What we are going to serve, offer this customer direct connectivity, low latency, better cost. I think that is a low-hanging fruit for us immediately when we go and pitch this kind of customer. And that is why, see, our platform is capable enough of handling any kind of customer, which we are serving some of the large OTT players. We can definitely go to the Netflix of the world or other OTT players, and we can say, guys, this is what I can offer. It is the same, better quality, low, maybe little lower price what you're paying right now, and direct connectivity, no latency. So I think that it could be our low hanging fruit right now. But at the same time, US itself is almost, if you see messaging, I think messaging contributes for 65% on overall communication channel over there. So starting from a small scale company to large OTT player, we have a huge room to grow over there. Like the market is growing day on day, and almost all these tech giants, which are, or maybe the new startup, I think most of these companies, they will have the market in this area where we are very strong. So our idea behind going to US or Europe is like to make sure we identify the right customer and we identify the right product and offering. And that is exactly how we are able to close all these big OTT players in past. And keeping that in mind, because we need to interact with them on a regular basis, we need to make sure we have a complete engagement with them. And I think if we have a fleet on road, I think people can go and engage, and we can close account faster over there.
So between the two of you, how many accounts, how many large customer accounts, Rajdeep, did Root close in FY21? Deal wins, logos that you won, what have you, however you define them. And John, then the question to you therefore would be, what's the kind of customer intake from the large market and customers of a particular size do you anticipate can come in FY22 for Root?
So I think, needless to answer your question, we have almost onboarded 424 customers in last financial year, and I think that some of them are very large banks, some of them are very large insurance companies, some of them are large OTT players, globally also, like, so overall, if you see, I think 424 logos last financial year is a huge number. and we do see there are many of them still doing the POC with our platform, and I think the potential of those some large customers are huge, and we believe that in next 2 or 3 quarters we'll see very large revenue or volume coming from them.
And John, you reckon that you could do, I mean, I won't ask for a specific number because that'd be foolhardy, impossible for you guys to say it out, but do you expect large deal conversions happening?
And I think that
from the NA market.
Yeah, I think that is building on Rajdeep's point. It's not absolute customer numbers, it's the type of customers that we target and we win. And you're right, we're looking to build around those, what I call the hyperscalers, because if you get in there, you obviously get a disproportionate return. And that needs, it's a different sales process, it's a more business to business, local. So we've got the ability, but if you look at all those global brands that we just identified, if you look on their business agenda, their number one or number two growth market is Asia, India, Africa. And that's where we can actually help them accelerate their growth. So it is about us being part of their ecosystem to accelerate with the value system of the latency, the reach, scalability, the responsiveness. And it makes it easy to do business with us. So this isn't about price. This is about getting the right customers who have a strong business agenda to be credible in those markets. You're right, going head to head in the US on a domestic, I'm not too sure what the value in the short term, I'm not too sure what our value add would be, but helping a US brand grow into Asia, into India, into Africa, which is probably massive for their growth agenda, I think we're best placed to do that. So we're competing on a niche where we are absolutely best in class. If we go to other markets, we could actually just be another player. We're not another player to those customers addressing that segment of the market. And that's how we've got to plan it, and that's how we've got to put resource. So I wouldn't say 400 customers is a good number or a bad number, but the right type of customers is critical, and that's what we'll be focusing our resources on over the next few quarters.
Radeep, just one small quick question, follow up on the customer thing, even though we are harping so much on it. If I can say, if I can ask you, do you reckon that the large customer acquisition curve for you, is it flattening, is it on an upswing, or is it difficult to say?
No, I think we are onboarding the kind of customer pipeline we have as of now. I think some of them are very large, and in last few quarters, in fact, we started getting inbound queries from them.
And you reckon that will continue?
Yes, definitely, and that is our main focus going to be.
Okay, so then in which case, let me ask you, I'm presuming that with a larger customer and the geographies that you're talking about, better pricing than what you probably have enjoyed end-to-end on an average basis. And if you mine the same customer for more, then maybe more business. What do you think, Rajdeep, happens course of the next 12 to 24 months to pricing, to margins? Because I did hear you tell me in the last quarterly interaction that gross margins northwards of 30% is probably something that the whole world does. You have not done it till now, but you expect that you will get there very soon. Give us some color there on pricing and margins, and what could happen over the next 2 years.
Neeraj, I think there are many companies based out of Europe. They also don't do 30% margin. Their margin ratio is 25% to 35%. And we are definitely doing much better as compared to them also, like at least as compared to them, whatever they are doing, we are also trying to raise that level. But again, you have to understand the market to market, like when we talk about we are working in an emerging market, the emerging market, the ARPU is definitely lower than compared to the developed market. So some of these companies are based out of US or Europe. I think their ARPU is much higher than as compared to India so we definitely see lots of potential. Why we want to focus in US, Europe, and Latin America, where we believe that the platform which we have built is already there. The connectivity is already there. What we need is just the customer to come on the same platform and start using our services, right? So I think we are already proved ourselves by creating a world-class platform which can handle any kind of volume, any kind of traffic, or any kind of customer. So I think it is all about just focusing more on a sales strategy. I think that John coming in, John managing that strategy along with me to make sure we define a target for a quarter, 2 quarters, and 3 quarters in a year or 3 years down the line. So the short-term goal and the long-term goal, that is exactly what we are going to focus with the whole strategy now. So in terms of our margin also, if you talk about, like we are definitely going to focus more number of customers. See, overall, if you see my platform, you know, it can handle say 10 billion traffic also, maybe 15 billion traffic also without, we don't need to invest anything right now because the
Sure.
platform is ready. If there's a customer coming in, like we will never say no to any customer now, because
Sure.
at any point of time customer coming, they are going to generate revenue and the margin for us. Okay, so if there's a say, classic example is a customer who has a potential of $100 million revenue and their margin is 19%, probably I will say yes, I want to serve that customer because that's the kind of potential that customer has,
Of course.
you know but overall margin will grow if you talk about the new age product which we are building right now. If you talk about RCS, voice, WhatsApp, all other newest technologies which we are building, that has high margin. If you combine overall margin of Root Mobile, including the revenue coming from the newest technologies, will definitely grow in that range of 25 to 30% in coming year down the line, and that's exactly what our vision is.
Yeah. So I was just asking that the gross margins northwards of 25-30%, and therefore EBIT margins 10, 12, 12.5% in the next 2 years is distinctly achievable.
It is definitely, because if you see our growth strategy or trajectory, also I think we have for the last 3 to 4 years. I think our focus is mainly on an enterprise customer. See, we believe it internally also in our sales conversation. Like we are the champions of enterprise. And we have to understand. I think for me, why we are able to serve so many big, large enterprise customers, because we try to understand the problem of the customer. For me, solving the customer problem is everything. Like whether the customer has a $10 revenue or $10 million revenue, the
Sure.
$10 customer can also become $10 million revenue if we solve his problem on time, and he will always work with us. I think the potential and the value we have right now is focus on revenue along with the margin. So I cannot just defocus on one side. It has to be the combination of margin and new product. And we built a new team especially for the new product selling. Like which means that we hired Milind. Recently Milind is now Chief Business Officer. His entire KPI is to make sure he generates revenue only from the new technologies. So we have a sales team, we have a product team, especially hired for the new technology. And that is exactly what we are looking at right now. And that is our focus. But again, the messaging piece, all the in-house, whatever APIs we have, I think which is giving a revenue from last so many years, will continue to grow. So that growth is going to grow. That is auto mode right now. What we are trying to build is a new revenue line, maybe coming from all other different channel of communication, which will add more margin, more revenue, and overall, if you combine, higher margin potential.
Sorry, does it, just for clarity, and then I'll get John in for a question, but just for clarity, does this fall under the bucket of A2P messaging only, Rajdeep, or are you setting up something which could eventually de-alienate itself from A2P and be a segment on its own and actually contribute meaningfully to Root's overall consult top line?
So Neeraj, if you say application to person communication, application to person means everything what we're talking about.
Okay.
Whether it's IP messaging, whether it's voice, whether it's SMS or email, anything which is generating from an application and which is reaching to a person is A2P. So I don't want to segregate my revenue in different pieces, but definitely we will, whenever the investor asks, we'll give that. I think in my last presentation, we have given that how much revenue we have generated from the new line of businesses. But again, A2P is what the whole idea, application to person. Like
okay, let me rephrase my question then, and excuse me for that. But so therefore, the new line of business, does it become a meaningful part of your say consolidated revenues 3 years out?
Definitely, and the overall focus is that only in coming year, between 2 to 3 year horizon, if you see Root Mobile, we want to make sure our at least 30 to 40% revenue coming from the new line of business and 60% coming from the messaging, and that is exactly what we are working on right now. So Root Mobile as a company, as a product company, as a platform company, we are trying to build a communication channel within a platform which will generate more revenue in coming years, because the adoption ratio is not that high as of now. As on when the adoption of this new channel of communication will happen, we will see the revenue generation. See, right now, I have all the channel of communication available with me, but it all depends on the customer. whether he's willing to use or not.
Sure, of course.
So I will go to a customer with my all offering. Let the customer select what way he can have a better user engagement. So we as a company are a platform company which has all layer of communication available.
Of course.
As on when people start using more channel of communication, we will start getting more revenue. And we do see in 3 years down the line or 2 years down the line, it will be at least proportionate, like 60-40 or 50-50 also.
Wow, that's great. John, just one quick question to you. As you see that side of the business, do you reckon that the growth in those geographies would be led purely by organic revenue growth, or do you reckon that inorganic strategy would be a large part too? Because knowing whatever little I understand from about Root till now, they've pursued both fairly competently. Would you reckon that the inorganic growth opportunities in the regions that you're ahead of would be a very integral part?
I think we'll adopt a dual strategy of and it's where you put your capital. We've got to put it into organic, because even if you do inorganic, after day one, it's now your business. You've got to get the value out of that. So having an operating model that we're comfortable with, where we get scale, and just to build on Rajdeep's point about, we'll have margin levers through a platform that can carry more services and more products with not the same incremental cost. That's a margin lever. Volume will be a margin lever. So those are the things that we can compete. The market sets the price. We've got to manage our assets in a more effective way to manage the margin. And I think we've got more levers than just what price we set and the volume we get, because it's a platform. And as that platform gets richer with capabilities and customers adopt more of those capabilities as they use their service, obviously we get a disproportionate profit as it expands. On inorganic, so organically, we've got to have a really strong, focused sales strategy, account growth strategy, because that's going to be the bedrock of our business. Inorganically, we'll accelerate it because we'll have access to new markets, we'll have access to new products, but at the end, we've got to operate it and we've got to enjoy an economy of scale and a fully integrated business. I've always said in every company, you can't buy your way to success. You've always got to operate your way to success. But with an acquisition, you can accelerate that growth. But at the end, our years will be measured by having great quarters. Our quarters are measured by having great months. Our months are measured by having great weeks. It's always been the same, and it will always be the same. That's how you build velocity into your business, with predictability and profitability.
Okay. Final question, Rajdeep, and that is on what's the, you kind of, without speaking about it, spoken about the run rate that you anticipate. I'm just wondering, industry leading is one thing, but I presume from what I remember the quarter before last, wherein you said that you are not a company that is mature, you believe you're a company which is still nascent in its sense. Would you reckon that industry leading is too broad a definition? And would you believe that maybe a 30, 35, 40% growth rate for the next few years is actually a very distinct possibility?
Neeraj, if you see our last 3 years growth strategy, growth, so I think we have grown over 40%, year on year basis. And for me as a founder, as a group CEO of the company, I think we always want to achieve that kind of a target. But you need to also keep in mind that it's certain pandemic situation, there are so many things happening right now. You don't know how the thing is going to materialize in next 2 quarters, but still we have given a guidance of between 20-25%. But based on our past history, I think people can always predict that what kind of growth we are looking at and what kind of growth we are going to achieve.
Okay, well, maybe we'll talk about these numbers as the year goes by. But gentlemen, both of you, thank you so much for taking the time out and being with us today. I really appreciate, and have a great FY22.
Thank you. Thanks for your time. Thank you. Take care. Bye.
Viewers, thanks for tuning into this edition of The Talking Point.